Welcome to the latest episode of our podcast series for financial advisors. Today's episode is The Elevation of Independence, Jim Dickson on Building Real Enterprise Value. It's a conversation with the founding partner and CEO of Elevation Point. I'm Louis Diamond, and this is the Diamond Podcast for financial advisors.
At Diamond Consultants, we help elite advisors identify the right environment for their businesses to thrive, whether that's at a wirehouse, boutique, or independent firm. With nearly 3 decades of experience, we've guided thousands of advisors and represented more than $250 billion in assets transitioned. And each year, 1 in 4 advisors managing $1 billion or more who change firms are our clients. Our process is education-driven and based on building relationships, starting as your strategic partner well before you're even thinking of a move. To schedule a confidential conversation, call us at 908-879-1002. Wondering why advisors change firms and where they're headed? Are transition deals going up or down? Those very questions and more inspired us to create our annual Advisor Transition Report. It's the award-winning, data-driven resource designed for advisors that connects the dots between the motivations around movement and the firm's appetite for top talent. Arm yourself with the knowledge you need to make smart decisions. Download your copy at diamond-consultants.com/transition report.
For decades, advisors operated under the assumption that there is a single path to success, a defined route dominated by the largest and most prominent firms. Over time, the landscape of options expanded, the independent space matured, and with it came a new set of challenges: how to turn the pursuit of freedom and control into something durable, scalable, and ultimately into a true enterprise. Jim Dickson has been thinking through that challenge for most of his career. After 2 decades at Merrill, Jim went on to found Sanctuary Wealth, where he played a central role in shaping what supportive independence could look like for growing advisory teams. Today, his own journey has entered a new chapter with Elevation Point, a next-generation independent platform focused on helping advisors take business ownership to a new level with alignment, scalability, and long-term value at the core. In this episode, Jim and I talk about what it really means to build a firm intentionally over time. We discuss ownership and alignment, how much of the pie you actually own, and why that becomes more important, not less, as firms grow. Jim shares how data and technology can support better decision-making and why AI is often better at delivering answers than asking the right questions. Then Jim and I explore how firms can double their business over 3 to 5 years without sacrificing control, and what advisors might do differently if they were starting from scratch today. And ultimately, why the future of independence is less about exits and more about elevation. So let's get to it. Jim, thank you for joining us today.
Louis, it's great. I think it's our 3rd time. Glad to be back.
Yeah, you're a pro, seasoned veteran. For people who haven't been lucky enough to hear you on our show before, let's start at the beginning. Walk us through your background and what led you into our great industry.
Yeah, it's an amazing industry. I spent 26 years at Merrill Lynch, started as a financial advisor, climbed all the way up the corporate ranks to the very top, was up for a big job in 2016. I didn't get it. And at that point, I was going to go just to another wirehouse, probably like a lot of advisors think. And I had this non-compete, non-solicit. And so I thought, wow, I'd sit on the executive committee for all these years and I could see where the ACATs were going, and they were going at that time to places like Fidelity and Schwab. And so I went on my own little tour of some of the big aggregators, some of the early legends in the independent space. And I was like, hey, tell me about this independent thing. And, candidly, I just fell in love, founded a firm called Sanctuary Wealth. We had lightning in a bottle. In about 4 years, I raised almost $30 billion and learned an absolute ton. We raised capital a couple of times. The last time we raised capital, had a different view on the way we should go forward than our capital providers. And so we went in different directions. But I really was passionate about what I believed. And that was that just having a platform without really being a true aligned partner where you shared ownership with the firm was not the best model. And so with some partners launched Elevation Point. And today we're a minority investor that really helps in both independent and wirehouse breakaway firms accelerate their growth, right? And we've been doing that for about 2 years now. already up to about 12 billion, and it's really going well. Super exciting.
Amazing. You answered like five of my questions rolled into one very succinctly, but I'm going to ask some of the questions again and maybe you can elaborate. So, what's a belief about wealth management or even financial advisors that you once held incredibly strongly, but you've since changed?
With the world changing with technology, it's a great thing for wealth management. But, big but, underline, bold, whatever the right way to think about it is, it's going to quickly create the haves and the have nots. Those that are tech forward and use technology, I think, are going to really accelerate and dominate. And those that don't are going to be left behind. And so, historically, as we think about this business, the client experience is the ultimate thing for clients. I just think clients are going to get more and more demanding because they're more and more comfortable with technology and AI. And if you don't bring that level of communication and service, I think you're going to be left behind. And so, for us, we're incredibly thoughtful. We've invested millions of dollars in being tech forward because I think you're going to have to be to really thrive in the future.
Absolutely. If I were a betting man, I thought you were going to say that independence you once thought was for down market, it was for lower net worth, et cetera.
I'm so over that. Absolutely right. If we go back to Merrill Lynch circa 2017, but there was two thoughts I would say, right? The first thought I would have said was like three maybe. First of all, is for smaller players. Secondly, your real estate would be next to the Chinese restaurant, the dry cleaner or something, right? And then the third part of that was that the technology was way behind. And boy, are all those things dead wrong. But I think we're so far beyond that now it's like, okay, you have this technology, you have this competitive fintech. Are you taking advantage of it or not? And I think that's starting to separate. It used to be, Lewis, even maybe 3 years ago, which isn't that far along. It's like, okay, what's your age? And I'll tell you what your enterprise value is. Today, it's much deeper than that, and it's much more broken up. And I think that's awesome because I think it allows for a better client experience, number one. And number two, sort of gives people a clear playbook of what it takes to build a great firm.
Yeah, it's almost like the breakaway movement. Now it's just like a thing, right? And like the independent space is it's more than a thing. So a lot of the darts that folks used to throw at the space are gone. So I agree with you. Now it's like, okay, we have a baseline. Now it's about who's leveling up far above that baseline. And those are the firms that are standing out.
Yeah, right.
So yeah, like you mentioned, I mean, you built Sanctuary Wealth, which was an amazing, I'll say, enabler for
Yeah, we were early.
a lot of wirehouse teams to have the confidence to break away to go independent with a support partner. And you guys absolutely killed it. And then you started Elevation Point. So can you dive a little bit deeper into Elevation Point? So you mentioned that you're an investor enabling advisors to grow. Can you dive a little bit more into what Elevation Point does in just the firm today?
Yeah, and maybe start with why we got there. So when I looked at the space critically, I thought, to the far left, there's these platforms, and you look at the platforms like the one I built, candidly, and they're absolutely fine, but there's not a true partnership, right? You get up every day and you're like, the only way I can make more money as a founder and a business owner is to sell somebody more services, whether the services are needed or not, right? And so when I looked at that far left, it felt almost more like an IBD model where you're like, how many services can I get somebody to do? Not a bad thing, by the way, it's just not what I wanted to build, and I didn't think it was properly aligned. And then to the far right, I looked at some of these aggregators where it's like, sell me all your business. And then the aggregators were sort of complaining, like, we have no organic growth. Well, you just bought somebody's whole business. You're now probably paying them a 20% payout. Of course, they don't want to grow. They want to go play golf or go selling. And so what we look for at Elevation Point, and it was a thought that I've had for a really long time, is we want to partner with people that have a long runway and really help them grow their business, right? And so what I found in sort of learning the independent space is there's a lot of things that people do that are just commoditized. Compliance is a good example, right? It's very important. It's table stakes, but it's hard to differentiate. And so we felt if we could do some of the hard things like building data warehouse, being a data lake so that people could really use their technology and their data to have a great client experience, really specialize and do unique things in private markets, really help with M&A strategies, really build a digital marketing platform that they could drive organic growth. Those were the levers that would really unlock true value and help people grow. And so, when you look across our platform, most of the time we're investing anywhere from 500 million to $3 billion teams, and we're helping them come practices to enterprises, right? And we're building their firm. I think when you look at a lot of the platforms that are out there today, I noticed really two things that I wanted to solve for. First is like, most people go to those platforms for 3 or 4 years, then they're out of there. And so clearly there's something that wasn't being delivered, right? If and we wanted to fix that. The second thing was, I call it the pie theory. So many advisors, they think about, gosh, I'm not going to own 100% of the pie. And what I talk to them about all the time is like, you're missing the point. It's not, do you own 100% of the pie? It's how much pie do you own? And we believe that with our expertise and our talent and our technology, we can partner with these really talented individuals to help them build their firm their way. but do it with an absolute growth machine behind them. We spend millions and millions of dollars to build these platforms, and most breakaways, they don't want to do that. So why not partner with somebody that's already built that, but do it in a way where you have control. So we take non-controlling stakes, about 20, 30% usually in these firms. And we get up every day thinking about the same thing. How do we grow enterprise value? Because at the end of the day, that's how we do better and that's how they do better. And we really felt that alignment was differentiated and sort of missing in the marketplace. And so, we've launched it now. Like I said, we're about 12 billion. We've done 10 deals, I think, today. We've got a really busy year in 26 ahead of us. And so I think it's resonating with advisors. They're really, how can I plug into this and really turbocharge this so I have more pie?
I like that. How do you have more pie? Because it's true. I mean, I come across the same objection. And honestly, a lot of times I don't blame people. It's like you're taking a leap of faith. You're breaking away, taking a big risk. And you're also taking the bet that, in this case, Elevation Point is the right long-term partner. Would you rather own 100% of a business that's worth 20 million or 80% of a business that's worth 100 million? Anyone would make that trade. It sounds like too, like I agree with you on the alignment side. If you're a IBD or many of the platforms that are out there, those platforms make more money when the advisors grow. So there's definitely some alignment, but you're kind of taking it to the next level is your enterprise value is going to grow if your business grows, but we're really helping you do the things that's going to help you build a better and more valuable business. And that's where the alignment comes in.
The word I like to use sometimes is we're anti-cookie cutter. I think a lot of those platforms, it's here's the platform, take it or leave it, hope it fits. There's a little bit of customization, and they define that as like, do you want Money Guide Pro or eMoney? That's not customization. Customization is taking your data and building unique workflows so that you can build your client experience in the CRM and automate that for your team, right? Those are the things where we've really invested to be able to do those things. And I think they're the things that down the road, when you get to a true investment banking process and you're ready to liquidate your practice or take some more chips off the table, you get rewarded for it. If you don't do those things, you don't get rewarded. And so it's not just about making them grow faster, but it's also maximizing the multiple. And we just think that as the buyers in the marketplace have gotten more institutional and gotten smarter, they really are differentiating between sort of that cookie cutter firm that doesn't really own their own data, doesn't really have their own infrastructure, to one that does. And we want to make sure we're on the right side of that trade for our partners and for ourselves.
Well said. Let's rewind the tape a little bit back to your time at Merrill. I always learn so much, and it's always great to hear your perspective on the decades you spent there. I think the first episode we did with you years ago, the title was something about drinking the Kool-Aid and serving it. So I know you were a very strong protector of the bull and of Merrill. So maybe talk a little bit about what did Merrill get right during the prime years of your career?
So much. I'll tell you that I would not be who I am or what I am without Merrill Lynch. And I'm really, really grateful for that. But I also think the truth was that for myself and a lot like me, when the financial crisis came and Merrill Lynch got bought out by a large bank, things just changed, right? And they had to change. When you fully acquire somebody, you get to make the rules, right? And those rules were different. And I think those rules led to a little bit less risk and a very different culture. And, I think I said to Mindy Diamond 3 years ago when we were talking about this, it was like, I knew I was in a box, but once that transaction happened, the box just got smaller and smaller and smaller and smaller. And I woke up one day and I said, look, I'm not in the box anymore. And I think for me and a lot of advisors like me, it takes a little bit of time to come to the realization, as mad as I got, I wasn't going to change it. I didn't get to make the rules. The rules were the rules, right? And so it was sort of around freedom and flexibility and entrepreneurship and things that maybe a large bank doesn't value as much as the legacy Merrill business did. And so, look, there were a lot of good things too, right? The banking services and some of the lending services and all those things. But for me and a lot of people like me, when we sort of weighed the two, it just felt restrictive and the box just felt too small. It wasn't a bad box. It just was a box that didn't fit me anymore. And I think that's when we talk to a lot of breakaway advisors, that's the way they feel, is like they're being limited, like they're running on a governor, right? And a lot of times you and I have talked about this, Lewis, we'll look at technology and it's not that they have bad technology. It's there's a governor on that technology that they can't use to its full capability, which limits their client experience. That's the way I thought about it. But I will say this, the time that I spent with Merrill was amazing. I mean, the culture, the people, the leadership, I still consider many of those people mentors and still lean on them when you get into a tough place or you have a hard question, because that place raised leaders as good as any place I've ever seen. It was hard. They were very candid in their feedback, but boy, did you get better. That part I'll always treasure.
Yep. Maybe part of it is just my job, but we certainly speak with plenty of advisors at Merrill and other firms like it who they're just going to tell you about all the problems, but they're not necessarily going to take the requisite action to change it. That's been a big, I think, defining characteristic of the breakaway movement is you have pain points, you have frustrations, but it's folks that are willing to push their chips to the middle of the table and do something about it. And you did that in spades. You've launched 2 businesses de novo. I know this focus episode is on Elevation Point, your current venture, but talking a little bit about Sanctuary, because it does define who you are and your leadership and your credibility.
Yeah, absolutely. So I'm proud of that work, right? I'm still a huge owner of that firm. And look, I mean, I think we were early. We got a lot of things right. We learned a ton, right? I tell people all the time, being a second time founder is the greatest gift in the world because you know what you might do different, right? But we think about those early days of Sanctuary and, it was sort of this cool mission that a bunch of really awesome people bounded together. And how many can we get to the other side? There was almost this mission of helping as many people we could towards independence. And that was really, really unique. And I think, I still look at those businesses and I think what I'm most proud of is those people are so happy. They're so happy to be independent and they're doing so well. Many of those deals you and I did together and that they're really, they're really happy to be independent. And I think, where I was going in my journey was, okay, that's fantastic. How do we take them to the next level? And it just became for me that my vision to get them to the next level, which was a minority stake and in a pretty heavy investment in technology and some other things that, our investors didn't want to do that. And, shame on me. I think it's a lesson for all of us that, before I signed that 372-page closing document, I should have been darn sure that we were aligned and we were on the same page. And so, was that frustrating? Yeah, it really was, but I don't regret it because it's a lesson learned. And I think now as I brought in capital partners, and we're really lucky to have Immigrant Partners as our primary investor, there's been a lot of thoughtful conversations around that. But I think that the early days of Sanctuary were just really all about sort of educating people on independence. If anything, we're an education company. And I think I look back at the movement, and of course you appreciate what Dynasty's done and others who even came before us, but I think we accelerated that movement. And that's something that I'll forever be proud of. I think for all of us, and for me in particular, it's like, that's great, but how do we keep going? How do we keep evolving? And that to me was what Elevation Point was all about is, okay, let's take the next step, truly become partners, not a service provider, and grow the heck out of these things. And that's what we get up every day thinking about.
Absolutely. Yeah. I mean, thinking back to the early days of Sanctuary, like I feel like what Sanctuary did was it catalyzed, we'll say like the middle to the upper end of the breakaway market. Before Sanctuary was there, like Dynasty was doing its thing. Focus was for a period of time. Hightower, they were recruiting breakaways as well. But I feel like those models were more of like, okay, if you're really big, you can work with those. There wasn't really anyone who was aggressively and with open arms going after the 1, 2, 3, 5, $7 million team. And I think doing what you guys did at Sanctuary, what Sanctuary continues to do, is it provides an alternative to traditional independent broker dealers to give kind of the next layer of white glove support for a breakaway advisor. So like with everything, like I'm sure there's like you said, things you wish happened differently, you did differently, et cetera, but things happen for a reason. And your learnings there kind of informed where you are today.
You nailed it. That's exactly what we did. I call it the middle market. We brought breakaway to the middle market. That was the path.
Amazing. Today, I'd say Elevation Point sits at the intersection of capital, infrastructure, and advisor independence. Would you agree, or how would you define Elevation Point's positioning?
First and foremost, I say to advisors every day and all those that might be listening, like, come on, this is your biggest asset, most likely. Put it on your personal balance sheet, right? And I think when you think about it that way, and once it's on your personal balance sheet, you begin to think about it a little bit differently. And I think some of those decisions you make, you begin to think more like a business owner and less like a W-2 employee. And it's like, how do I maximize this? How do I scale that? How do I grow it? And what we've always felt, and that's a really big jump from advisor to CEO. That jump for some people, they can do it on their own. But I also see a lot of practices that try to do it on their own and they sort of get stuck. They're independent and they're free, but they're not growing necessarily, or they're growing plus or minus the market. And they haven't really maybe put the capital forward to build a data warehouse, to be able to do M&A like they wanted to. And so we thought we could do something in a very aligned way where we could do the same thing we did really well, which is take people independent. And I would put our transition team up against any in the world. Caitlin Douglas is an absolute rock star, and get them independent. But I think for a lot of models today, that's where they stop. they get them independent, and we want them to thrive in independence, right? We want to create enterprises. And so, we really partner with that firm to put together growth plans and say, all right, what do we need to do? And, I think a lot of that does come down to capital, right? And if you think about, to me anyway, most firms aren't using digital marketing. They just aren't. And yet, when we look under the covers at organic growth, for a lot of firms, it's not what it could be. And so we think we can accelerate that. Same thing with M&A. My partner Duke, we run a pretty thoughtful process when we bring these firms in. And, we think for every firm we can invest in, every year and a half, 2 years, we ought to be doing a tuck-in, because these advisors know their markets better than anyone else. And if 6 out of 10 advisors are going to retire, let's get the right ones, right? But to get the right ones for a lot of practices means you have to have the capital, right? And number one. And number two, if you integrations are hard. And so when we can bring our whole team in to support those integrations, we're allowing them to stay focused on their core business while we help them integrate and handle the integration of an acquisition. And we think things like that, are really, really powerful. The other thing that I think, Lewis, and you and I have spent a fair amount of time talking about it, and you actually, as you do for many things, advise me on it. The one thing I would say about independence, when I think back to my early days, there's no question, zero. Independence was better, in my opinion, than the wirehouse. I just felt that 100% and would go to the grave. But I would also say I felt there were a little bit of holes. And, from a wirehouse advisor, where maybe some of the institutional firepower that you had at a big bank, you didn't have an independence. And so one of the things that I did was went to my friends at Goldman Sachs and said, hey, can you help me solve this? Can you help me build the infrastructure to do hedging and monetization, to do maybe some high-end lending? And I'm not just talking about securities-based loans, but I'm talking about, large jumbo mortgages. Can you help us put together model portfolios? Because when we look at these teams that are leaving the wirehouse today, usually sometimes 30, 40, 50% of their portfolio or model portfolios ran by the OCIO office at that wirehouse. And so being able to institutionalize that and say to your client, look, we used to be managed by UBS, as an example. Now we're going to have that same outsource capability with Goldman Sachs. That's a really easy conversation to have with a client, right? And so building out that institutional firepower, investment banking is another thing. And, not just investment banking, but sort of a sales and referral network where you could go down market into a network of specialty bankers. Because look, the baby boomers are here, and almost every advisor I know has 5 or 6 clients that are going to sell a business over the next couple of years, and they may or likely will become their biggest clients, right? And so I felt like those were holes in independence that you could solve, but you sort of had to patchwork it together with a bunch of things. And so for us, for Elevation Point, we're able to develop this relationship and this infrastructure with Goldman. It's been really, really, really powerful, because now you have the freedom and flexibility of independence. You have a capital partner that can help you do M&A, both from a capital perspective and an ability to do it. And now you have every solution in your toolbox that you had at a big bank, but you don't have to use any of it, right?
Yeah.
That's the most powerful thing. It's your decision to do your way. And I think for me, over the last 12 months that we've launched that's been a major step up in independence. You just have this toolbox that you didn't have before right at your fingertip. So you can stay focused on the 2 things you do best, which is delivering your client experience and finding new clients.
Yeah, I completely agree. It's like, who wouldn't want the best of what you had access to, but you can work on multiple platforms. There's no selling away. You really run your own playbook. So I'm with you. It was an unlock.
It's not only no selling away, right? But it's your responsibility as an independent advisor to find out what the best option is, right? Like, go get the best loan. Whereas at a wirehouse, you have to sell the only loan you have, which is that firm you work for. So, to me, just being able to put that all together and sort of modernizing, like Independence 2.0, and then there'll be a 3.0, and it'll keep going. We just want to lead that. I felt like we led that early at Sanctuary, where we were early in sort of modernizing the flexibility and how that could work. And now we just want to take it to a different level and, sort of went up market a little bit, to do that, because I think that's where we can add the most value, but super excited to be able to add that value.
You should be. Can you share an early success story that you think best illustrates the Elevation Point model in action?
Yeah. I think we've got a couple of those, but share one in Minnesota. We have a great firm there, Triton Wealth. And, in fact, like literally in a week, it'll be their 1-year anniversary. And we have a big acquisition, tuck-in acquisition that we're working on, and they're going to double their firm in 1 year. The advisor we're going to buy is going to retire out over a 2 to maybe 3-year period. We're sort of working on that final construct, exactly the way you would want to build it. So that's one construct. The other example that I would give you is, our mutual friend, Ben Domain in Lafayette, Louisiana. The guy's an absolute rock star. Family Office Partners is the firm if anyone wants to look them up. But the prospecting that Ben is doing way up market with both family office services as well as sort of unique and bespoke alternative investments, it's a growth machine. I'm so glad we own stock in that business. They are growing like anything I've ever seen, but they're doing it because they're using tools that those high net worth clients really want, but they're more bespoke. They're not the beta trade of a big bank, but they're sort of alpha trade of like, hey, what do you want? Let me help you build it. Let me help you deliver it. And with both the private markets, the alts, as well as the family office services, paying people's bills, doing things like that. And what I found that Ben is so great at is, like everybody's lined up to go in the front door. Ben's going in the side door, with family office services, and then he's getting all the money. And so, those are two examples. I could go on, but I do think it's working. I know it's working. And the growth rate we're seeing amongst our firms is, it's early, but it's off the charts.
Amazing. Yeah. And Ben was a large UBS breakaway that we collaborated on. And we'll definitely have him on our podcast in the future.
You should. He's a rock star.
Bring some more specifics to his story. We talked a little bit about this, but I'll ask you again. I'd say many firms claim to support advisor independence. In very practical terms, how does Elevation Point really differ from the aggregators, the IBDs, the minority private equity investors, large OSJs, roll-ups, and I throw a bunch of other industry jargon at you. But how would you kind of stack yourself up against these categories?
First of all, there's a million, right? And it's hard to get them all. And I say to my team all the time, let's be focused on who we are. And who we are is really all about helping our firms build their custom home. I think when I look for all those flavors in some way or another, they're about selling or delivering their process or their control over an advisor. We don't want to do that. Our stakes are minority, they're non-controlling. And as a founder who had, sort of their firm taken away, so to speak, I guess I'm probably really sensitive to that. I think first and foremost, you got to keep control, but not only do you have to have control, but a great partner to me helps you build your vision. You don't conform to their platform, right? Because when you do, there's a sea of sameness. And what I see, that word sea of sameness, I use it a lot because when I look across the independent platform, I sort of see a sea of sameness. And what I mean by that is there's a fair amount of people that can help you get to independence, right? And you get to independence and, for the first 12 to 24 months, everything feels pretty good because everything's new, right? It's a new vocabulary, new words, your freedom. You don't have to go to a sales meeting. You don't have to do some crazy bank compliance mandate. But what I've noticed is about that 24-month period, the really good ones, they start getting a little itch. They start scratching a little itch and saying, I want more. I want different. I want to be able to customize my experience. I want to be able to do things. And on many of those platforms we talked about, you just can't do it, right? Or you can do it in a really minimal way. We wanted to build a really bespoke platform where we could partner with firms and build that infrastructure, but it's sort of like a custom house, right? You go and look at a custom house sometimes and it's like, hey, here's the model that gets you started. Now, how do you want to develop that? But not only do you want to develop it, but I think where the true power comes is a true partner that doesn't have control over you to make you do things, but has the wisdom and the experience to say to you, hey, I've seen this movie before. You might not want to do it that way. We thought about this. And I think the real value of Elevation Point is in those conversations that myself and my partners have with our partner firms that, you may think you want to build it this way, but we've seen a lot of people chase a lot of squirrels. Let's talk about it. It's your decision, but let's think about, is that really what's going to unlock value? Is that really going to improve your client experience? And I think it's that deepness in that relationship that allows it to do. I say all the time, we make recommendations, they make decisions. That's our model. But I do think for our partners, they value our recommendations and they value our experience. And look, then if they say they want to do something, we'll roll up their sleeves and we'll get it done with them. And I think by doing that, Lewis, by rolling up and helping them customize, they can stay focused on what they should, which is the client experience and prospecting. That's their superpower for most great advisors.
Well said. What mistakes do you often see advisors make when they're evaluating firms to align with or partner with, whether independent or otherwise?
There's a couple of things. I think, one sometimes is like what we've seen, I've done 115 breakaways, I think now. And what I've seen is almost when you break away, there's a really good growth pattern, right? And there's some models out there that are like, hey, trade your equity with our equity. Let's merge them together. And I just don't know if I love that model because I feel like maybe it's a little too early for people to do that because a lot of times those are well diversified ETFs, if you will, of a bunch of portfolios, right? And a lot of times when you go independent, you really do hit a nice growth. And so that would be one thing. The second thing I think that I see is they really struggle to be the CEO. They struggle to build a business plan and run a team and run a business in a way that they have to do. It's just a mindset switch, right? You couldn't do that for 25, 30 years for most of these teams at a wirehouse. And now overnight, you're a business owner. And so I think, having coaching around that, having a partner that can help you structure that is so important because the thing that drives me insane, like crazy, is when a great talented team leaves the wirehouse and then they get independent and they do it like they've always done it and they don't take advantage of the opportunity and the flexibility to really maximize their potential. And so for us, it's about, sort of framing the opportunity and making sure that we help them stay aligned on two or three big rocks at a time. Because if I had to simplify it into one sentence, is they chase too many things. And all of a sudden they're over here, they're over here. It's like popcorn, right? Everything's going everywhere instead of saying like, look, these are the two things we're going to do first. Once we nail that, we're going to do this, then we're going to do this. And I think that a lot of the models either don't let them chase anything or they let them chase everything, right? And I think the right cadence is probably somewhere in the middle. And I think that's what the best partners do across this business to be able to, you know, sort of build a business and build it their way, but build it that it has the best chance of success.
Well said. I'm curious on your viewpoint because being in the space, you've raised capital a number of different times in many different ways. Can you just talk through, in your view, the different types of capital that's out there and the decisions that you made for Elevation Point and the capital backing that you've aligned with?
Yeah, look, when we founded Elevation Point, I wanted to be really intentional because I had a bad experience in my last capital raise with Sanctuary. And so I wanted to be really thoughtful. And if I go back like all the way, right, I'll just sort of embarrass myself a little bit and say, like, in the early days, you're like, I want dumb money. And I know that's a bad word, but like, I just want somebody to give me capital and leave me alone. And boy, Lewis, was that the biggest mistake that I think you could ever make because this business is hard, it's complicated, and you get into moments where you maybe need a skill set that you didn't have. And what I found is the right partners with the right experience, can really, really help you do that. I'll give you an example that sort of brings that to light. When we launched Elevation Point, we started with some family office money and we got really successful really quickly. And so I knew we were going to have more capital. And so one of my mentors in this business and the people I look up to most is a woman named Liz Nesbold. And so I got in an airplane, I flew to New York City and I'm like, Liz, I screwed this up last time. I don't want to do that again. Let's talk about it. If you were me, what would you do? 2 hours later, we agreed that we were going to be partners. And, what was so interesting about that partnership, and I just think it's a great example. I was really good at breakaways. I mean, with Caitlin Douglas, my partner, myself, Brad Smith, knows more wealth management advisors than anywhere in the world. We had this massive pipeline, but we hadn't made a ton of minority investments. And Liz's firm, Immigrant Partners, have been doing that for 35 years with a crazy IRR and a real skill set. To be able to bring that together, that was capital that was around a lot more than capital. They helped us get our deal structure right. They helped us build out something where we now have a really unbelievable, family office suite of services that really helps us differentiate ourselves. And I think that's the kind of capital that you want is people that bring experience and wisdom. But I'll also say you better have trust, right? And I think the other lesson that I learned is whenever you think you're going to need capital, start much earlier because it always takes longer than you think. And then what happens, and this is what happened to me in one of my experiences was, you get so many deals and you feel like you know in your gut that maybe it's not the right fit. You just sense it. Most of us have that sense, but you feel like you almost have to close the deal because you've got this pipeline full of teams that are coming, right? And so I spend a fair amount of my time now every single day thinking about capital, getting ahead of it, always, thinking through with different consultants and different bankers that we use to say like, all right, how can I make this decision in the calmest, most non-panicked, most non-way so that's a plan, right? And I think for a lot of financial advisors, that capital thing, like it was for me, if you spent your entire career at a wirehouse, is a really foreign thing, right? All of a sudden, you've got a room of literally 20 lawyers and a bunch of accountants, and you feel like you can't trust anybody. And so I think finding the right partner, whether it's an institution like Elevation Point or an individual firm like the ones we both serve, trust is imperative. And I think the thing I've learned to do is, and I've had some great investors and I've had some rough ones, right? That's just the life. And I think on the rough ones I didn't do that I wish I would have was reach out to a few people that had done business with them or they'd invested in and say, hey, how'd it go? What was that board meeting like? Do they have a temper? You start to learn all these things that I think are really, really important. So, sort of to summarize that is I think trust is paramount. Somebody that can really add value, like immigrants done for us, is incredibly important. And then the third thing would be, take your time and get ahead of the game, because when you are rushed, capital will take advantage of you. They'll know that you're in that position. They'll put you against that corner and you'll end up agreeing to things that you didn't know you were agreeing to or shouldn't have agreed to. And I'll just say to anybody out there, I feel like I've been through it all. Call me. I feel like I owe the industry. The industry's been really, really good to me. I'm happy to talk you through sort of some of my scars and what I learned and help, because you just don't know until you know. And sometimes learning can be very expensive.
Absolutely. And there aren't do-overs most of the time.
No.
It's not like I shouldn't have came to UBS. I got a big deal, but that's fine. In 3 years, I'll go and trade the business to Morgan Stanley. Like, it's different when you're taking on a permanent investor. It's a very nice offer. I'm sure people will take you up on it. Looking back, if we have this conversation, like I'm sure we will, in let's say 3 years, what has to happen with Elevation Point for you to say, I'm really proud of where we are and we really hit it big? We had a massive amount of success.
Yeah. I mean, for us, we're looking for basically 12 partners a year, somewhere between 500 million and $1 billion, that we help double their business in 3 to 5 years. That's what we do. And not only do we want to double that business, we want it to be the most high quality. We've made a heavy bet in data. First of all, I want to be really clear. I think the future of wealth management is still and always going to be centered around the advisors, but I think AI is going to be really important, but I think it's going to be an enabler. I said to somebody the other day, I'm like, look, AI is really good at giving you answers. Wealth management's about asking questions. And I don't think that's ever going to change, but I think the firms that are going to dominate are going to have an AI machine behind them that allow them to serve more clients, serve them faster, serve them more customized. And so that's what we're obsessed with. We partner with Mile Marker, Judd and that team to really build out something that's very differentiated at the data level. So our teams can customize their workflows, they can customize their client portals, they can deliver a really unique client experience, do it in a fast way that's more profitable because they don't need as much staff because they're using agents and other things, and do it in a way that's just very modern. Because if money is passing from old people to younger people, because that's just where we are in the life cycle of the world, you better build a modern practice or you're going to be left behind. And if Elevation Point can lead the way on that, man, I'll be the proudest founder you've ever seen.
I love it. I've also taken note that multiple times throughout this interview, you've mentioned technology and data. Like, it's very clear it's a real part of your business and what you believe. Because everyone would say, oh, we have great technology and technology is important. It's free to say that, but to double and triple down and to really drive the point home, to me, means you're really doing something different and you really believe that the future is as you're saying it is, which I very much
look at a lot of firms, Lewis, and we see both breakaways and independent firms that are sort of stuck and frustrated. Those are the two segments that we invest in. And I see so many businesses and they're like, we're going to use AI. I'm like, you don't have clean and organized data, you're never going to be able to use AI, right? And then they're like, oh, well, how much is that going to cost? Pretty expensive, right? And so I just think there's so many businesses that are going to get left behind. And we just want to make sure our legacy is, our partners are on the right side of that river. And so we are obsessed with it. We are obsessed with data. We are obsessed with workflows, and, a lot more work to do, but we get up every single day thinking about how we can do it. And I think we do it with people that are really good at it, but that's the way the world's going. I just think if you don't do that, you're going to be left behind.
Exactly. Yeah. I mean, I think like a unintended consequence oftentimes of breaking away or changing firms and not being able to bring your data is you get a data do-over. Like,
yeah, 100%.
Yeah, it makes advisors sweat. It makes me sweat that you can't take your financial plans, your performance reports, or your CRM history, which kind of makes you feel like you're behind the 8 ball. But at the same time, if you can build new habits, you use data in the proper way, you're kind of rebuilding your data in a refreshed way that's going to serve you. So I always like to find the positive and the negative. And to me, that's an absolute positive in this moment for folks who can't take their data and are changing firms.
By the way, clients don't care, just public service announcement. Like the advisors get much more emotional about that than the end client does. What the clients want is a great client experience with integrated technology with two-way API that's like integrated, right? And like they want you to be their quarterback of their whole financial life, not just the
Yeah.
money you manage at XYZ wirehouse.
Yeah. I hear multiple times a week, well, I have 27 years of CRM notes. Like, how am I going to be able to reference my meeting from 12 years ago with Mrs. Jones? I'm like, are you really referencing that?
No,
Does Mrs. Jones really care?
no.
Anyways, we move on. What's your view on the wirehouse space today? Do you think it still serves a purpose? And who do you think legitimately should stay in that model and really thrives there?
I think it does serve a purpose. And I think the purpose is for somebody that wants to be an employee advisor, right? And they just want to run the play and they want to run it really well, but they're not a builder. I think where most people that we talk about get frustrated is when they don't have the freedom and flexibility to do what they think could be better, right?
Yeah.
And I think the challenge with the wirehouse model is it's so large that, it's the least common denominator and everything's built around the least common denominator. And so you are limited. And the best advisors that we talk to, are really, really frustrated with that. But when I talk to an advisor who's not frustrated with that, and it's like, this is fine, this is enough, it tells me they should stay exactly where they are because they have what they need. It's not that it's bad, it's just sometimes limited, right? And in my opinion, as the best advisors want to sort of change and grow and build, like a great example of that is a lot of the firms that we invest in end up doing a lot more work around tax planning, as an
Yep.
example. You're never going to be able to do that in a warehouse. And if you're okay with that, fine, stay there. It's right. The other thing I think is interesting is if you're not a builder and you need somebody to feed you clients, a warehouse is a great place to do it because they'll use their banking channel to help you fill that. But it'll never be your client. It'll always be their client. Right. And so that's where I think that goes. In my opinion, I think this early data shows this. The warehouse channel is going to continue to shrink, but it's never going to go away.
I completely agree. Yeah, there's so much I read, like the wirehouses are doomed and whatever, but like there's clearly a place for them. And at
Yeah,
a
100%.
minimum, it's an amazing place to start a career still, even if the training programs have been cut. And I speak with advisors all the time that are incredible. They're world-class advisors, but they value the things that a wirehouse provides. And then what gets them out of bed every day is not building a team or a
Right.
creative marketing strategy or maximizing enterprise value. It's how do I grow my practice, increase my income, and maybe I'll add some team members along the way. And that's
That's right. I call it the easy pass.
Yeah.
And that's not bad. I don't mean that bad. It's just, boom, I'm just going to do this.
So if the wirehouse is the easy pass, then what's independence? Like off-roading through the mud?
No, I don't really think so, but I do think it's, if you think about like, if we were going to make an analogy maybe around traveling, right? There's customization of your itinerary. And then there's going on hiring a guide and being with 50 other
Sure.
people when you go to Europe and being on the guide. That's to me the wirehouse. And I think what independence is more customization. What I do think is going to be interesting over time, like I feel like I've been now in the independent space for 7, 8 years. I think clients are starting to understand it more and ask for it. And that didn't happen 5 years ago. So I think it'll be interesting to see where the client votes and where the clients, because to me, if I've got everything in an open architecture sort of way, and we're not there yet, but we're getting closer, right? Where you could offer any service from any firm, no matter where you custody that, you could go out and have access to that. That sure makes the warehouse less attractive, right? When you only have one lane. And I think when a client understands that, wait a minute, I could have 5 options instead of one option. That's going to be tougher. I don't think they're quite there yet, but as they get to understand that more, I think it'll be interesting to see where that lies.
Yeah. I mean, anecdotally, I feel like I'm starting to see it more with larger, more sophisticated clients where they're just understanding the benefits or the merits of the independent space in a different way. I mean, still, like if there's a new client, potential client, they're probably still going to interview the person that their buddy or the person they golf with works with. Many of those guys are going to be at JP Morgan and Morgan Stanley, et cetera. So I think that dynamic will always be there. But I'm definitely seeing it with more like, say, family office type clients where they're considering, do I just start my own family office? Or if I don't, why don't I join a multifamily office or join a firm that has many of the things that I would want to build for myself?
100%. You nailed it.
Last question for you. If you were starting from scratch today as an advisor, I know you started your career as an advisor, but knowing everything that you know now, what would you do differently in the first 5 years? Or what would you recommend to young Jim, the advisor, with a ton of hindsight bias and a lot more experience than you did back then?
Yeah. I think I would be, two things. I think I would become really good at business development led through financial planning, because I think that's the differentiator for most advisors. One of the things I see a lot of young advisors, they go onto teams as sort of service providers and they never learn how to make it rain. They don't learn how to be rainmakers. And I say to everyone, in fact, I'm speaking at the University of Florida later this week, that, like, don't get stuck in that, right? Or, you can be an apprentice for a while, but you've got to be able to develop business if you really want to maximize the opportunity for you. And the second thing is I think it's a huge advantage to be tech forward. This business is going to be tech forward no matter what. The other thing that we see sometimes, you and I both, is that advisor who just can't be tech forward. They're too late in their career. And I think that money in motion and that end client is going to require, a real tech enabled client experience. And so I think for an advisor, for me, I'd be great. I'd lead with financial planning, to be a great business developer, and I'd deliver a world-class tech enabled client experience. Those are the two things I would focus on.
I very much agree on the business development. Those who can make it rain, even if it's not your God-given ability, but if you can bring in clients, you can write your ticket anywhere in the industry. That's how you have the most control over your income, over decisions. Can I go independent? Do I trade the business to a wirehouse? And that's, I think, what always the business will value more than great servicers. They are folks that have the ability to grow on their own 2 feet. So I completely agree. That's all I had for you. I think this was take 3 for us, but we'll make sure to do take 4, 5, and 6 as Elevation Point continues to scale. One of my biggest lessons from listening to you today and just following your path is you skate where the puck is headed. Like, you look and you see a potential problem and then say, hey, I'm going to understand everything. I'm not going to have an ego and say, I'm always going to do it better. But you look to see what you don't think people are doing, and advisors and what they want better than anyone, and then go and create it. And I tell it to advisors all the time, like, there's a lot of freaking options right now, but if what you're looking for doesn't exist, you now have the ability to go and create it yourself. And the great entrepreneurs in our industry, that's what they did in any industry. They see a problem, they build around it, and then they go execute. So I think you're a textbook case study in how to build a successful business, not once, but twice.
Well, thank you, buddy. It's always good to be on with you. I appreciate our partnership, and let's just keep making this great industry better and better together.
Love it. Thanks, Jim.
Thank you.
As a financial advisor, you hold yourself to the highest standards of integrity, honesty, and credibility. You are successful because you take your professional responsibility seriously and are dedicated to your clients. But are you living your best business life? Are your goals aligned with your firm's, or could a better option exist? Should I Stay or Should I Go is a book written with you in mind. It's a self-guided journey that walks you through the key steps that we take with our advisor clients. This strategic thought process and roadmap to professional self-discovery is designed to help you ask the right questions and think critically and objectively, whether you're considering change or not. Learn how to get your copy at diamond-consultants.com/thebook.